You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin. His website, oilandgas-investments.com. Welcome to the show, Keith.
Good morning, Jim.
LNG, what's happening there?
Well, there's been a lot of news on the liquid natural gas front here in the last 2 to 3 weeks in Western Canada. The big news, obviously, is Petronas gave a positive but conditional FID, and FID stands for Final Investment Decision. So they basically said, look, we're going to do this assuming that everything happens the way we expect it to, which is the government's going to approve this and the First Nations are going to approve this. So they're basically ready to go, they've said. So they're taking a long-term approach, and we didn't really see a big jump in stocks, in either producer stocks or services stocks. But it's still a very, very good sign for the Western Canadian economy, because with the low price of oil that we're seeing right now, there's a lot of layoffs in Alberta, and of course with the new NDP government there, the royalty regime is creating some uncertainty, so employment's way down. So the LNG game out in Kitimat and Prince Rupert has the potential to be a major employment boom for Western Canada, and really almost take over from the oil sands if oil prices don't recover.
And there isn't the environmental resistance to LNG that there is with oil.
That's correct. Particularly amongst First Nations, they've basically said here, natural gas is good and oil is bad. Now, of course, they're all getting paid by a lot of groups like Tides Canada here in Vancouver, who get their funding from the U.S. to say things like that. The amount of funding coming in is pretty crazy on that front. But for now, they've said natural gas is good, oil is bad, and they seem to be much more willing to work with industry on the gas side to get stuff done. Well,
it seems to me, too, on the gas side that not only do they get cash payments, but they've been promised a lot of jobs.
Yeah, I don't think that's anything different between what you see in the oil side or the gas side. But I guess that particularly on the oil side, I know some of the pipeline companies, when they first started going in there, basically didn't quite get how powerful politically these First Nations groups were, and really thought that they could have business as usual in the Canadian oil patch. And of course, things have changed so much. The social aspect of any of these big projects is now the determining factor, just as much as the economics. So it'll be interesting to see how it all plays out in the coming 2 to 3 years on that front.
How big a deal is Petronas?
Well, Petronas is talking about doing 2 billion cubic feet a day and shipping that to Asia. And you think that construction costs are about $7.5 to $8 billion per BCF a day capacity. So that's $15 billion, $16 billion out of the gate. And then they're talking about upping that to 4 BCF a day for phase 2. And so that would, simple math, takes that to $30 billion. That's a lot of money. That is a lot of money. Every single available working person who wants to work in Western Canada will basically be employed at that level.
Of course, and the things they need, pipelines, people to monitor stuff, engineers.
Oh, all those spin-off effects are going to be huge. So obviously the pipeline needs to get built, and there's going to be, I think that's actually kind of taken a back seat on the controversial side. I think as this LNG develops closer to reality, what needs to happen on the pipeline and the route it's going to take is going to come back into the news a lot more. So I think that's probably one thing that the market has kind of forgotten about that still really has to happen. So it's interesting on that front. But yes, pipelines are going to be a big part of it.
Shell, how close are they to being approved for their massive projects?
You know, so Petronas is doing theirs in Prince Rupert and on a place called Lelu Island, and Shell's doing theirs in Kitimat on an old site run by Methanex many years ago. So theirs is already an industrial site, a huge industrial site, and they're getting very close to getting their environmental approval, probably within a few weeks. And that is a big deal, because really, I don't want to say you're home free after you've got that approval, but you're close to being home free. And basically that, at that point in time, it really is up to you whether you want to go ahead with it or not. And so Shell has a lot more exposure and experience working with communities in developments around the world compared to Petronas. So I would think they're going to get their social license a lot easier than Petronas will. So I think that's a big difference between the two front runners that could actually end up turning it around, that Shell gets done first as opposed to Petronas. But once that big environmental approval is done, it'll be interesting to see what kind of timeline Shell puts on their development.
And also, I just had an article again, the death of coal. Nobody wants to use it. It's dirty, although it's also still a necessity in a lot of places.
Oh, yeah. What we're seeing here is, and I confess to the readers, Jim, I don't know a lot about coal, but what I do know is that it's certainly under the gun here. The U.S. and Canadian governments really would like to see coal phased out. They think it's dirty. They don't believe in clean coal anymore. So, and with such cheap and abundant natural gas, it just makes sense that that's where you would want to move to. It's your cleanest burning fossil fuel. It's also the cheapest. Like it just sounds like it's a win-win-win-win-win. So, coal stocks have just been decimated, and coal prices have been decimated too. And actually, that's kind of bearish for natural gas. I know at first glance you think, oh, they're stealing market share from coal, so that's good. But the reality is that there's still enough coal around to power things that when the price of coal goes down, that's basically what the floor is for natural gas as well, because a lot of these big industries are able to switch back and forth between coal and natural gas pretty easily. So when you lower the price of coal, you're really lowering the floor price of natural gas as well.
Now, I'm curious here. Maybe you can help me. At the World Women's Cup for soccer, I see one of the major sponsors is Gazprom. Who is Gazprom?
So Gazprom is the Russian natural gas supplier that supplies most of Europe's gas. And those ads are absolutely geared to the European audience watching the FIFA Women's World Cup.
We'll have more with Keith Schaefer right after this.
More and more people are looking to the internet for intelligent, riveting, and thought-provoking interviews. To advertise on the Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Keith Schaefer. Oil. It seems that the price at the pump in the Vancouver area, anyway, doesn't seem to be suffering too much from the price of crude. It's in the $1.30 mark or whatever, almost what it was when crude was at its height.
Honestly, gasoline prices in Vancouver are just stunning, Jim. We, by far, have the highest gas prices in the world, and of course, are in North America, and that's certainly because of the very expensive 15 or 17 cent a liter gas tax we've got here. But it just, in my mind, it should not be here. Not when crude is at $60. Like, that's just crazy. So I'm not really sure what's going on there, but it sure is disappointing. Normally in my business, I say, hey, if we've got high gasoline prices, my wife should be happy. That means we're making money running an oil and gas newsletter. But that's not the case right now. That's we've got high gas prices, but low oil prices, and so all these stocks are languishing, and we're not making any money, but boy, the guys at the pump sure are.
There used to be a time that if a country in the Middle East burped, the price of oil would skyrocket. That doesn't happen anymore. How come?
Well, that's a great point, Jim, and the reason is that for the last 10 years, right up until about a year and a half ago, 2 years ago, Saudi Arabia was the only country in the world with any spare capacity. All the spare capacity was concentrated there. So if there was any hiccup in the House of Saud, the rest of the world caught cold. So what we're seeing now, though, is that there's lots of different countries, because of, particularly North America, because of the shale revolution, the states. The U.S. production has gone from 5 million barrels a day to over 9 million barrels a day in the last 5-6 years. So what's happening is that we now have multipolar spare capacity. So the U.S. has really brought back their production here to basically close to being a standstill by the end of this year, we're figuring, so that instead of being up 1 million barrels a day. And the main plays in the U.S., Jim, still have a long way to go. The Bakken, the Permian, the Niobrara in Colorado, the Eagle Ford in Texas, all these plays aren't really at the end of their lives by any stretch, so there's still a long way to go. Plus, if oil prices were high enough, what we've since found is that we can actually downspace the wells quite dramatically. So we started off doing 4 wells every square mile, then we're doing 8 wells, sometimes now we're doing 16 wells. So the point is that there is a huge untapped inventory that we can access to put a cap on the price of oil. And before, we were totally beholden to the Saudis agreeing to increase production when we needed it. And they did. They were great managers of the oil price for years and kept price that was very good for them, but not debilitating for the rest of the world. So now we're at a stage where Iraq has more production capacity, Iran has more production capacity, the States has more production capacity, as well as Saudi Arabia. So the market now believes that no matter what happens geopolitically, we're going to be able to fill the gap, supply gap from somewhere. That's the difference. That geopolitics really is not making a big deal in energy prices anymore.
Now, I know back in March we were talking about, we expect the prices of oil to drop dramatically because all the facilities that store oil would be full by the start of summer. But are they full, and has it had a big effect?
No, they're not full, and it has not had a big effect. Two things have happened. One is that the street has kind of figured out that there's way more hidden capacity than really what's publicized out there. And B, we've seen 7 weeks in a row of drops in inventories at Cushing and around the United States. So we're really not that hard up for storage. And you're seeing that in the futures prices as well. The contango has really become flat. Contango means where the price in the future is way higher than what it is in the current month. And back in January, we did have a huge contango, what's called a very steep contango, where the price difference between the spot price, current price, and the futures price was high. Now it's not very high at all. So that's the street. But the point is, we are still in contango, which means the street does not believe that we're going to see any storage issue.
Now, when you said if the Arab countries cut back on oil production, North American step up, is Canada a big part of that?
Not too much. No. We've been producing as much as we can all the time. There's nobody on the oil side yet who's really shutting in production. Gas side, yes, but oil side, no. So our production, our heavy oil production is continuing to grow, and a lot of that's just because it's all mega projects that are moving ahead, like Imperial Oil's Kearl project, KEARL, is ahead of schedule and is going to go from 0 to 100,000 barrels here and then off to maybe 200,000 barrels in the next couple of years. So that's something that's already been in the works and will go ahead no matter what the oil price does. But light oil production, which is much more susceptible to change when oil prices change, it has plateaued, but it hasn't stopped growing. So it's so no, Canada really is still pretty much pumping as much as we can. Where we've seen the difference, Jim, is that any new mega projects have just been halted in their tracks.
And once those new mega projects come back, don't expect the high-paying jobs to all return. I understand Suncor has contracted out for 175 of those giant earth-moving trucks that look like hotels on wheels. Well, they pay the operators $200,000 a year for those machines, so instead they're buying ones that can be turned into robots. So when the oil and gas, or I should say the oil sands turns up, if ever, the high-paying jobs may not be there. And there's also oil rigs apparently that can move themselves. Oh
yeah, self-walking rigs. Yep, that's happening. Yep.
So the robots are going to be getting jobs. People shouldn't, count on getting back that job in the long term after all.
The roughnecks are definitely going to see a reduction in pay for sure, and I think everybody will. Just like in any business that has a long run, people start to get overpaid. You had field workers making as much or more than CEOs sometimes, and that's just what you needed to do to keep the business going. It was so competitive. But I would think that absolutely wages are going to be lower when all this comes back.
And also, too, the G7 saying we expect in the next 85 years to wean ourselves totally off fossil fuels. Is that possible? And does that send a kind of a dark, deep, wet blanket over everything?
No. Anybody who takes any prognostication seriously that's more than 18 months out is crazy, Jim.
Right. So it sounds good politically to say that.
Exactly.
Unless you're in Alberta.
That's right. Then it can have a little more immediate impact.
Ask Tim Hortons about dropping that TV ad from their in-house circuit. I wonder how their sales are right now in the oil patch. Mm-hmm. Keith, thanks a lot for chatting with us.
Jim, look forward to our chats every couple of weeks. To talk to you soon.
My guest has been Keith Schaefer, editor and publisher of the Oil and Gas Investments Bulletin, their website, oilandgas-investments.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.